Hello guys, welcome to my YouTube channel. Today I'm going to explain new chapter, that is budgets and budgetary control. Definition of a budget. According to the Institute of Cost and Management Accountants, England, a budget is a financial and/or quantitative statement prepared and approved prior to a definite period of time of the policy to be pursued during that period for the purpose of attaining a given objective. It may include income, expenditure, and the employment of capital. In simple words, budget is a plan that helps you manage your money by tracking your income and expenses. Budgeting. According to J.R. Shield, budgeting is the formulation of plans for future activity that seek to substitute carefully constructed objectives for hit and miss performance and provide yardsticks by which deviations from planned achievements can be measured. In simple words, budgeting can be defined as the process of creating and following a budget to effectively manage your finances. Objectives of budgetary control. Planning. Planning means setting financial goals and creating a budget to guide spending and resource allocation. Coordination. Coordination in budgetary control involves aligning financial activities and managing budgets to achieve financial objectives. Communication. Communication refers to the exchange of information and feedback between individuals or departments. Control and performance evaluation. Control in budgetary control means monitoring and adjusting financial performance, while performance evaluation involves assessing goal achievement. Classification of budgets. Budgets are classified into 5 types, that is classification of budgets according to condition, classification of budgets according to period of time, classification of budgets according to content, classification of budgets according to function, classification of budgets according to flexibility. Okay guys, introduction part is over, so let's begin with problems. So guys, see the first problem. The expenses budgeted for production of 10,000 units in a factory are furnished below. Materials per unit is 70, labor per unit is 25, variable overheads per unit is 20, fixed overheads per unit is 10, variable expenses per unit is 5, selling expenses 10% fixed and per unit is 13. Distribution expenses 20% fixed and per unit is 7. Administration expenses per unit is 5. So prepare a budget for 6,000 units and 8,000 units. Administration expenses are fixed for all levels of production. So guys, for 10,000 units he has given us full information. So we have to find out for 6,000 units and 8,000 units. So guys, now let's get into the problem. First we need to draw pro forma, that is particulars, and 3 columns for the given 3 units, that is 10,000 units, 6,000 units and 8,000 units, and we have to draw 2 columns for each unit. So in this budget to control we have 2 costs, that is marginal cost and fixed cost. Marginal cost consists of all variable expenses and fixed cost consists of all fixed expenses. So first take down the marginal cost. So in marginal cost we will calculate materials, labor, variable expenses, variable overheads and selling expenses. First take down the cost per unit value for each marginal costing. So for selling expenses we will calculate, he has given actually 10% fixed. So subtract 13 minus 10%, so we will get 11.70. So now we have to calculate cost per unit into 10,000 units, that is each units. So cost per unit into 10,000 units, we will get the total value, and same procedure for the 6,000 units and 8,000 units. Now calculate the distribution expenses. In the question he has given 20% fixed and 7 in units. So subtract this 20% minus 7. So we will get 5.60. Now calculate 5.60 with 10,000, 6,000 and 8,000 and note down the amounts. Now totalize the full amounts of 10,000 units, 6,000 units and 8,000 units and mark it as A. Now we have to calculate fixed cost. Here fixed cost means there is no change. It will remain constant. The amount will be constant. Now calculate the fixed overheads, selling expenses, administrative overheads, distribution expenses. In the selling expenses, we will multiply, that is 10% fixed is there, no? So 10% into 13. So we'll get 1.30. and in the distribution expenses we will multiply 7 into 20%, so we'll get 1.40. Now calculate this amount with the given units. After calculating, totalize the full amount. So after totalizing the full amount, mark it as B. So now grand total we have to do, that is marginal cost plus fixed cost. So grand total A plus B, we will get the final amount. So now let's see the second problem. Johnson and Co. produces an article. The estimated cost per unit are given below. Materials is 60 per unit, labor is 48 per unit, expenses are 12 per unit. Semi-variable overheads at 100% activity level 10,000 are estimated to be 2,40,000, and these overheads vary in steps of 12,000 for each change in output of 1,000 units. Fixed overheads are estimated at 3 lakhs. The selling price per unit is also estimated at Rs 240. Prepare a flexible budget at 50%, 70% and 90% levels of capacity. So in this problem he didn't give any information directly, that is fixed cost and variable cost. He has given semi-variable overheads, that is half fixed and half variable. So now we have to calculate the fixed and variable costs. And he said that in every steps of 12,000 for each change in output of 1,000 units. That is, for every 1,000 units, 12,000 units are changing. So we need to calculate for 2,40,000. Now we will see the problem, guys. First we need to draw the pro forma. But in this pro forma there is a little change. That is, he has given the estimated cost per unit. So only take 50%, 70%, 90% and 100%, and don't draw column as cost per unit. So now calculate the variable expenses, that is materials, labor and expenses. He has given materials at the rate of 60, labor at the rate of 48, expenses at the rate of 12. So multiply these rates with the given percentages, that is 50%, 70%, 90% and 100%. So note down the values after multiplying. Now calculate fixed expenses. In fixed expenses we have fixed overheads. In the question he has said that fixed overheads are estimated at 3 lakhs. So take down the value 3 lakhs for all the percentages, that is 50, 70, 90 and 100, because fixed means it remains constant. Now calculate the semi-variable expenses. Here we have a small working notes for semi-variable expenses. That is, in the question he has said that for every 1,000 units, 12,000 units are changing. So we have to calculate for 2,40,000. So semi-variable is equal to 2,40,000 divided by activity level, that is 10,000. So 2,40,000 divided by 10,000, we will get 24 per unit. So now we have to calculate variable cost. So variable cost is equal to 12,000 divided by 1,000. So we will get 12 per unit. Now we have to find out fixed cost. So fixed cost per unit is equal to variable cost minus semi-variable cost. So 24 minus 12, we will get 12 per unit. Now we have to find out semi-variable expenses. So we have already found out fixed cost and variable cost. So take down the fixed cost and variable cost. So fixed cost is equal to 12 and variable cost is equal to 12. So fixed cost remains same. So calculate it with 100%. That is 10,000. So we will get 1,20,000 because fixed cost remains constant but variable cost changes. So variable cost is equal to 12. So calculate it with the given units, like 12 into 50%, 12 into 70%, 12 into 90% and 12 into 100, and note down the values. Now calculate the total amount. After calculating the total amount, we need to find the profit. So formula for profit is selling price minus total cost. So he has said that selling price is estimated at 240. So multiply it with the given units, that is 50, 70, 90 and 100. Now subtract the sales with total cost. So we will get the final answer. So now let's see the third problem. A factory is currently working to 50% capacity and produces 10,000 units. Estimate the profits of the company when it works to 60% and 80% capacity. At 60% working, raw material cost increases by 2% and selling price falls by 2%. At 80% raw material cost increases by 5% and selling price falls by 5%. At 50% capacity working, the product cost rupees 180 per unit and sold at rupees 200 per unit. Cost of rupees 180 is made up as follows. So given materials is 100, labor is 30 and factory overhead 40% fixed and the rate is 30, administration overhead 50% fixed and the rate is 20. So now given information is for 50% capacity, so we have to find out for 60% capacity and 80% capacity. So guys, let's start the problem. So given information is for 50% capacity and it produces 10,000. So we need to calculate for 60% and 80%. So for 50% it is 10,000. So for 60% is equal to, we have to cross multiply 60 into 10,000 divided by 50. So we will get 12,000 and 80 into 10,000 divided by 50 we will get 16,000. So now draw the pro forma same as the first problem. So first calculate the variable expenses, that is materials and labor. So given materials in units is 100 and labor is 30. So calculate it with 50%, that is 10,000, we will get the total cost. In 60% we have to see the question first. At 60% working, raw material cost increases by 2%. So add 2% for 100. 100 plus 2% we will get 102. Calculate it with 60%, so we will get 12,24,000. Same with 80%. Now calculate for labor. So after calculation we will get the amount 30 for both 60% and 80% and calculate the total cost. Now we have to find out semi-variable cost. So now we have to calculate semi-variable cost. Semi-variable cost means half fixed and half variable. So in the given question, factory overhead and administration overheads are half fixed and half variable. So take down the values and here the total cost is 100. So divide the 30 into 40% fixed and 60% variable. Now calculate 40 into 30, so we will get 12 units, 12 rupees, that is units. Now calculate 12 units into 10,000, so we will get 1,20,000 and it remains same for 60% and 80% because fixed cost always remains same. Now calculate the variable cost. 30 into 60% we will get 18 rupees, that is units. So calculate for 50%, 60% and 80%. So we will get different amounts and means different values. Now calculate the administration overhead. So divide 50%. That is 50% fixed and 50% variable. So 20 into 50% we will get 10 rupees. 20 into 50% we will get 10 rupees. So now calculate this with. So now calculate the units amount, that is 10 rupees into 50%. So we'll get 1 lakh and it remains constant for 60% and 80% because it is fixed and it remains constant. Now calculate the variable cost, that is 10 rupees into 10,000. So we'll get 1 lakh and into 60%, 10 rupees into 60% we will get 1,20,000. 10 rupees into 80% we will get 1,60,000. So now add the all, now total the cost. So we'll get 18 lakhs, 2 lakh, 20 lakhs 40,000, 28 lakhs 28,000. So we know that sales are given 200. So we need to find out the profit, right? So sales minus total cost, we will get the profit. So first calculate the sales, and here 60% and 80% we need to subtract minus 2% and minus 5% because it has given in the question. So guys, today's session is over and in the next session I will explain the remaining 4 problems. Thanks for watching my video. If you like my video, please subscribe and share it to your friends. See you in the next video. Have a nice day.